great big world out there. How you doing today? It is Saturday. Hey, we are in the 4th week of August. This is now August 23rd. Yay! Aren't you glad? I have not seen y'all in like 7 whole days. I really missed y'all. How y'all doing? I hope y'all doing great. I'm doing okay. It's Saturday and it is hot. Oh, October, November, December, January, and February is not getting here quick enough for me. I swear it's not. My mom used to always say, don't rush your life. I'm not rushing my life. I'm just rushing the summer months to get out of here. I'm so over this heat. I'm over bugs. Ugh. Woo. I hope everyone had an awesome week. And if you didn't, you encountered some highs and some lows. Not to worry. Still thank God that you are here and you are in the land of the living. And you made it, right? So, before I jump into the show, I got some phone calls. I got some text messages. I even had some people that stay in the area like come and knock on the door and say, hey, I didn't catch the show last week. You posted a link, but I was unable to access the link. I couldn't open it. I couldn't see it. I couldn't do this. It was just so many I couldn't. And I'm like, wow, that's interesting, because I did the same thing I normally do and it just wasn't working. So I apologize for that. So in lieu of that era for Saturday, August 16th, I'm going to redo the show today because I don't want anyone to miss out on this important and valuable information. Okay? So I apologize for that. Forgive me. Like, we in the money. See, that's what I get for trying out new stuff. Because when somebody brings something new to me that's from IT, I'm so quick to try it because I want things to flow better. So I apologize for that. So let me get into the interesting fun facts for today. Now, fact number 1. The commercial available video cassette recorder. I know everyone remembers a VCR. Like, I have a VCR in storage. I still remember the VCR. And it was once called the Apex VXR 1000. And it was introduced in 1956. Not only that, you know, the VCR is about that small, maybe like about that size, right? Back in the day, it was the size of a piano. And in 1956, the cost was equivalent to today's cost of $50,000. Can you imagine for a VCR? Like, whoa. But now if you go on eBay or other sites that have them, you're going to pay a substantial amount because they're like outdated. They're no longer, people are no longer using them. Kind of sort of like the black and white televisions. But I just found that interesting that it came out in 1956. And people had to do some massive work to get it to still work in this little compact size when it was big as a piano. Like, I just look at how time just flies and everything, how it goes about, like the size of a piano. I just can't imagine putting a cassette in the size of a piano and watching a movie on it. But yeah. And what else is interesting is that I know that I use a computer, and maybe 99.9% of Americans also use computers. And you know, you have that little mouse, right? So the gentleman that introduced the mouse, his name was Doug Engelbart. He was an engineer and inventor of the mouse. The mouse was made of wood in 1964. December 9th of 1968, Doug hosted a demonstration that's known today as the Mother of Damas. So can you imagine him hosting this event, telling everybody about this little mouse and what it can do? And it was made of wood back then. So just imagine if he was still here now. You have like the optical mouse, the shark mouse, you have the wireless mouse, Bluetooth. Like, look at how things have evolved and advanced. Like, whoa, like, yeah, gotta love it. So I thought that those were two interesting facts, because like, who didn't watch VCRs, and like, who don't use a mouse, even if it's the mouse on the inside of the laptop. Okay, now we are still in the month of August, of course, and yes, we are still celebrating all August's birthdays, right? So although we are on the 23rd, there were some special birthdays that passed, of course, to my wife Gisette, my best friend Lucretia, and my nephew Champ David. I love you guys. I hope you guys had an awesome birthday. And we have one more birthday coming up, and that's to my Nana. Rest in peace, Nana. We solely and truly miss you. Words cannot explain. I got a few announcements to make, and one of those announcements is, as I mentioned, today is Saturday, August the 23rd. We have exactly 23 more days before your corporation return is due. So if you filed an extension in March and you file out on forms 1120, 1065, 1120S, 990s, etc., those tax returns are to be submitted to the Internal Revenue Service by September 15th. If they're not submitted, you will be considered late. And if you do owe money and you did not send that money in, you're still considered late, and you will receive a penalty for that. For the October filers that file out on Form 1040, you guys have exactly 53 more days, excluding today, for your tax return to be completed. So if you haven't got your documents, go ahead, start getting that stuff ready, getting it to your preparer if they're still taking it. And if not, let's just try to be more equipped and more ready for our accountants and our preparers, because it's a lot, especially when you're dealing with deadlines, right? That's so important. So I want to make what I call, and what I see a lot of people say, POV, which is point of view, in a public service announcement, right? So let me tell you, when it comes to friends and families and relationships, and you form those valuable and valid foundations with people, you never know who is suffering in silence. You never know who does not want to talk about what's going on, who don't want to repeat the same thing twice, who don't want to put that burden on you. Even though you're a friend or a family member, you just never know what's going on inside of a person's head and how they're doing. So with that being said, and it's kind of hard to tell, especially when someone is looking for validation, to be loved, to be accepted, to be treated equally, or just to be in the moment around friends and families. A lot of people don't have that. So when you have that, you need to cherish that moment. That is so important and so precious. I hosted an event, and it was just because, no particular reason. And when I tell you a time was had, a time was had. When I tell you the individuals that showed up and showed out without rhyme or reason and did it just because, that spoke volumes, right? But you just never know who's going through anything. And so when you get amongst people and you're having gatherings and you're talking, it's okay to say, hey, are you okay? Is it anything I can do for you? Is it anything you want to talk about? You want to get off your chest? Just know that I'm a call away. It's okay to show up for others, but it's also okay to say if you're not okay. So I do want to give out some special shout outs, of course, to my wife, Gisette, my sister, Denise, and Richard, her husband, my brother-in-law, Benita, my sister, Baldhead, and Kenitra, Auntie Pam, Cakes Baby Abby, Champ I Am, my little one, Mr. Scott, T-Pain. Oh my God, I saw my Uncle Didi and Auntie Miranda. I have not seen my Uncle Didi since 2022. And although that may not seem like a lot of time, but it is a lot of time. Like, thank you guys. Valencia and her husband. I call my account Miss Obama because her statue is just up there with Miss Obama. So yes, Miss Obama, that's what I call her. Call me Mike, Cousin Sharice and Cousin Walter, Said Mac and Cousin Angie, Michi, Danielle, Mercedes, Buddy, my ride or die people who's there just because it's a Tuesday and it's 1 o'clock. Shamil, Chrissy, Pooh, Nail, Crystal, like, man, I love you guys. And there's so many more people that showed up. And if I forgot your name, please, please, please forgive me. It's not that I'm forgetting you intentionally. I'm calling off names off the top of my head who I see like right now. So I want to tell you guys, my aunties, my Auntie Johnny, my Auntie Tootie, like, I love you all from the pit of my soul and my heart. Words cannot describe what this event did, not just for me, but for others that came out and just celebrated life, love, laughter, joy, peace. Because again, you never know what someone is dealing with. You never know what someone is going through. Because again, people don't want to release their burdens up on you. Some people find it better to just, talk to a therapist or just sit and deal with it on their own, because they have that much love for you that they don't want to embark that information up on you. So if family is getting together, if friends is getting together, please go out, show love, show that respect, be involved, because your presence may very well do something to them in a more significant way that you don't understand or see. So I just want to say thank you to everyone for being you. Memories never fade, right? Memories will never fade. And although memories will never fade, reflection is an eye opener. It's just on you to look through the lens to see what that eye opener is. And I want you to think about what I said. Reflection is an eye opener, but it's on you to look through that lens to see what others don't see. And it's okay. And it's okay if you don't. It's your memory. It's how you see it. So just enjoy life, enjoy laughter, enjoy love, enjoy peace, etc. So I just wanted to get that point of view out, get that public service announcement out, because someone needed to hear that. I don't know who needed to hear that, but someone is going through something right now with friends, family, loved ones, spouses. They needed to hear that. So I hope that I gave you some type of hope. And know that Anointed Accounting and Shavana is here, and we love you no matter who you are, no matter what you've been through. So with that being said, let's jump into understanding your money, which is write-offs, deductions, credits, and accountability. And again, I apologize that this did not air correctly last week, but I made sure it was going to air correctly today, okay? So when it comes to taxes, people think it's just you filling out a form. You dropping your documents off, your accountant is going to fill it out, etc. But no, it's not about just filling out a form. It's about keeping more of your hard-earned money intact and also staying compliant. You also want to learn how to stay organized with keeping your receipts year-round, keeping daily logs of everything, and keeping accurate records, just so when tax time comes, you get a better result. So that's what tax time is all about, especially for small businesses and 1099 workers. That's what it's for, because you want to be aware, right? So let's jump into tax write-offs, tax credits, and tax deductions. I hear so many people say, well, I got a tax write-off, but it didn't make my refund no bigger. I got a tax credit, but my refund didn't get no bigger. So I want everyone to understand the difference between a write-off, a tax credit, and a deduction. So as you're looking at your tax documents and your preparer and or your accountant is going over your taxes with you, you would understand more what's going on than not understanding it at all, right? Right. Okay, so here we go. A tax write-off does not directly reduce your tax bill. So that means if you're writing off something and you got a tax bill, that don't mean because you're writing off something, it's going to automatically reduce your tax bill. Not at all. Instead, what it does, the tax write-off, it reduces your taxable liability. So if you remember in July when I was going over your Form 1040, we went over what's taxable income, what's totable income, what's adjusted gross income. So when you have a write-off, those write-offs can reduce your taxable income, right? Which means you pay fewer taxes up front, whether it's dealing with medical, advertising, depreciation, startup costs, licensing fees, and maybe even your home office deduction, right? That's what a write-off is, a tax write-off. That's how it benefits, because it reduces the taxable liability. When we talk about a tax deduction is an amount you subtract from your income when you file, so you don't pay the taxes on it. By lowering your income, deductions lower your tax. So here we go. We done lowered that taxable income. Now we have all of these deductions. And some deductions is what the Internal Revenue Services gives, which is a standard deduction and an itemized deduction. So let's talk about that. Generally, across the board, you're giving a standard deduction. And for tax year 2024, the standard deduction is as follows. If you are single and it's just you and no one else, your standard deduction is $14,600. If you are a married couple filing jointly, or you are a surviving spouse, your standard deduction is $29,200. If you are head of household, your standard deduction is $21,900. So this is what it's automatically given to you, set from the Internal Revenue Service, that they're giving you to help with your taxable liability, to help bring down that taxable income. This is what they allot you. Now, when you itemize, that means all of your itemizations outweigh what the standard deduction would have been. So let's assume you're single, but you're itemizing. If you paid more in itemizing, you would take the bigger tax deduction, which would be the itemized amount. So say when you're single, it's $14,600, but you itemized and it came out to $20,000. Well, you're going to get the greater part of that, which would be the $20,000, not the $14,600. So, this is ideal when expenses exceed, again, the standard deduction. So typically people that itemize pay a substantial amount in medical, prescription, donations to charity, miscellaneous charities. Also, they pay mortgage insurance. They pay property and state taxes. They pay local taxes. So all of this money equals up, and they're able to use this as an itemized deduction that will help reduce the taxable income based on the expenses that they provided. So this is not something that your preparer would just come up with out of the blue. This is something that you, the taxpayer, will have and will submit over to your accountant or your preparer. Now, let's talk about a tax credit. We done talked about a tax write-off. We done talked about a tax deduction. Now let's talk about this tax credit. A tax credit is basically dollar for dollar on the amount taxpayers claim on their tax return to reduce the income tax that they owe. So let's say you owe $3,000 and you get a tax credit. That tax credit is going to be dollar for dollar to help reduce that tax that you owe. So if you go to what I call the Big Bible, which is the Internal Revenue Service website, it says in big black letters, eligible taxpayers can use them to reduce their tax bill and potentially increase their refund. Shavonna, what do you mean? Explain that to me. Gladly. Let me take a sip of water. So, let's talk about Earned Income Credit, which is EIC. This is called a refundable credit so that you can get more back than you pay in taxes. It's refundable, which is that dollar for dollar. Now, if you pay higher education, which means your dependent or a third party pays education expenses for higher education. So let's just say you're going for your bachelor's, your master's, your PhD. At the end of each semester, which would be a year, once that year is tallied up, you're going to receive a 1098-T from your institution that you go to. And it's going to have any scholarships, any grants. Everything is going to be on that form. And you can get up to a $2,500 credit. It's a credit. That's what they're saying. Now, an eligible student must be enrolled in an educational institution. And the eligible student can be yourself, your spouse, or a dependent that you are claiming on your tax return, okay? Now, another refundable credit that they have is the premium tax credit. And people know that as the marketplace or Obamacare, dealing with insurance. The premium tax credit, also known as PTC, is a refundable credit that helps eligible individuals and families cover the premiums for their health insurance purchase through the marketplace. So, in order to qualify for that, you have to have income that falls within a certain tax bracket and in a certain range. And if you're married, you cannot use this doing married filing separately. You have to be married filing jointly or single for this to work if you're going to get it, to be using this as a refundable credit. Now, you cannot be claimed on someone else's tax return as a dependent in order to get this refundable credit. Hey, Auntie Sugar. You cannot be claimed on someone's tax return. So what do you mean, Shavonna? What I mean is, let's say I file a tax return, my own personal tax return, but someone else claimed me on their tax return. I would be unable to get this insurance coverage through the marketplace because someone is already claiming me. I have to be my own person that's filing this tax return in order to get this refundable credit. Now, I know I said a lot when I talked about a tax deduction, a write-off, and a tax credit. Now let's go back to that. Remember, a tax write-off does not directly reduce your tax bill. It reduces your taxable income. Whereas a tax deduction is subtracted from your taxable income, lowering your income from the deductions that you gave. And the taxable credit is a refundable credit for taxpayers that's dollar for dollar. This is why it is so important to have those consultations and those meetings with your preparers and your accountants, not just once a year, but throughout the year, whether you do it quarterly, whether you do it annually, not annually, but semi-annually. You can do twice a year, you can do 3 or 4 times a year, but you want to stay in the loop of what's going on because tax laws change every year. Nothing stays the same. I think I said that on my show in July, that we can sit back and we can get ready for tax season, and we can go through all the studying and all the testing that we have to do to get us ready for January 1. Come January 2, all of that is out the window because something new has came about. So they change just that quick. So it's best to stay abreasted with your accountant and your preparer so they can keep you updated on things that's happening. So let me tell you other reasons why it's best. And I talk to my clients about this often. It's called spot opportunities early. So that means that if you come to me early enough and let's say you see something wrong with your check stub, they're not taking out enough taxes, or you don't see that Social Security or Medicare has been taken out, or you're questioning what sits on your check stub. That's something that you can bring to your accountant, because they're able to look at that and they're able to do an audit on that and tell you, hey, this doesn't look right. You probably need to go to HR or payroll to get this situated. Something is missing. Let's say you get married or you had other children, more children added to the family. Well, here comes those refundable credits that I talked about. Here comes maybe even deductions. Let's say you opened up a business and it wasn't a corporation, it was an LLC, and that's attached to you, which means that income or that loss is going to transfer over to your Form 1040. Your accountant will be able to assist you when it comes to those estimated tax payments that you want to make, so you don't get hit with a deficit at the end of the year paying more back in taxes. So it's so many things that we can catch if it's brought to our attention early enough. Costly mistakes, we can also help avoid that, which means having a conversation with your accountant reduces any penalties, any audits, or any risks. So like, say for instance, you got a letter from the state of Illinois. You give that to your accountant if you don't know how to address it. Let's say you got a letter from the IRS and you don't know what's going on. All you see is that there's a balance owed. Give that to your accountant. Don't sit on it, because they can potentially help you figure out what that issue is. And if you have been granted time within that letter, you want to stay within that time frame so you're not hit with other interest and penalties and paying back unnecessary money that you don't have to pay back. This is also important for 1099 workers. You especially need to get with your accountant and or your tax preparer so they're able to spot these errors if there are, and they're able to assist you. Now, you also want to plan for cash flow, which means, let's just say it's slow for you, but you still have bills to pay and you want to stay in compliance when you're making those estimated tax payments, or you're sending in money as you can because this is how much money you assume that you are making. Oh, I'm sorry, people, excuse me. My big brother has joined in on my live. Oh my God. Hello, Kevin. I love you. Oh my God, my brother is here. Oh, okay, let me get back. You know, when a celebrity come on scene, you got to say, hey. But that cash flow, they help you plan for that, because it's so important that you're not caught at the end of tax season in that deficit. You don't want to be sitting there crying your eyes out like, I owe the federal and the state. Where's all this money going? No, talk to your accountant. They're able to help you. Another reason that's good that you talk to your accountant is because you want to stay in compliance. You don't want to miss anything, and they'll be able to help you. That's why it is so important to have that year-round accountability. I myself, I reach out to my clients. Hey, what's going on? What's new? You started a new job. What happened with the old job? Did you get married? Did you have any other kids? Did you buy a house? Did you do Bitcoin or stock? Let's talk about this, because when the end of the year come, because I already created a file and I've talked to you, I know what to ask for at the end of the year when we have our consultation. New clients get that 60-minute free consultation, whereas my returning clients, they get that 30-minute free consultation, because I'm already aware of what's going on because I'm active. Now, you also, during this time, you can have business growth advice. So say, for instance, you're working, and let's just say you're good at making posters and gym shoes, and you feel like you could break into the industry and make more money with that. Well, that's called company formation. You want to sit down with your accountant and talk about that so they can help you with the taxes, with the tax margins, what's going to work for you. And if you're still having to work a 9 to 5, how that plays a role into it, because it does. Because consider what you're doing on the side is all cash based. You're not paying any taxes on that money. No one is matching your taxes, which is Social Security and Medicare. So this is all you paying this yourself. So when you're paying this, you need to have some form of monies that's going to cover the money that you made for those taxes. Where is that going to come from if you're not paying estimated tax payments? That W-2 job that you have. Or let's just say you're working 2 jobs. One job don't know about the other job, but yet you have a deficit at the end of the year. Well, did you fill out that W-4 correctly? Did you check you have multiple jobs? That's why it's best to have that relationship with your accountant. Now, I'm going to tell you why it's also important to have that My Tax Illinois account open if you're in the state of Illinois. If you're in any other state, whether it's Indiana, you're in Michigan, or you're in Washington, every state has their own Department of Revenue. And I'm sure every state will allow you to open up that account. I've said it once and I'll continue to say it. It is okay to be nosy about you. It is okay to be nosy about what sits on your Social Security number. It is okay to be nosy about what is attached to your name. Because believe me when I tell you, other entities are reporting all of this to the federal and state entities so they don't have to pay taxes on you. So it's okay to be nosy about you. When it comes to having that IRS ID Me account, you can go back probably 10 years. You can also call in because they have stuff archived. You can get your transcripts there. It's a security process. So when you get on ID Me, you can't just up and just register and get on. No, there's a 2-step authentication. So once you log in, it's going to send an email or a telephone number that's on file, a 6-digit PIN number. Once that PIN number comes and you enter that PIN number, you're able to get into that account. So it's secure. You don't have to worry about nothing. It's 24-hour, 7 days a week access. The only time there is not that access is when they're going to have system maintenance upgrades. And they post that at least 5 days in advance all across the website. Our site will be down Sunday starting at 1 in the morning, and we'll be back up on Monday or Tuesday, whatever date they set. But they let you know in enough advance notice that, hey, this is what we're going to be doing because we're making changes to these sites. The changes is to better your information so you can see what they see. Let's say you're on a job and they want transcripts. Instead of you mailing out the form that they give you, which is 4506T, you could log right into your my IRS ID Me account and you can select transcripts. Get all those transcripts, whether it's wage and income, or you want to see what's been reported on you, what's out there on you. You can get copies of all that and you can submit that to who needs it. Let's say you're on a payment plan. You can go right through your account and make your monthly payment plan. You can make those estimated tax payments. Hello, the beautiful Bam. You can make those estimated tax payments right there. It's all so convenient. Now, is there a convenience fee to make that payment? Absolutely, because nothing is free. But they have it there for you to do. I hear a lot of people say, well, I moved. I didn't update my address. I didn't do this. I didn't do that. I'm not calling the IRS. It takes 19 hours to get through after being on hold and being hung up on. I don't have that much time. Guess what? If you have that account with IRS ID Me and My Tax Illinois, you're able to log into both of those accounts and you can see any letters or notices that they have attempted to send you, because they're going to put it on your profile. Also, it's important to have these accounts set up because a lot of issues can be solved with having these accounts. Sometimes you won't be able to access anything without having these accounts already in place. So it's so very important to have these accounts in place so it doesn't hold up anything. This is just to benefit you. It takes about 7 to 13 minutes to set that account up with the Internal Revenue Service, and you can preset it up with My Tax Illinois, but their setup is a little bit different because they're going to send you out a letter to the last known address that's going to have a unique code on it. And when you get it, you're going to have to go back in and enter that code. But again, if you need assistance with that, make sure you reach out to your tax preparer and or your accountant. Now, I talked about letters and notices. I want to talk about clients being accountable, and not just clients, taxpayers being accountable. No, I'm not expecting you to be an expert. I don't want you to be an expert. I want you to be aware, because your social is a unique identifying number that represents you. You and only you. If that's compromised, you need to know how and why. So let's start with letters and notices. I get it. A lot of people don't like dealing with the federal and state entities. But guess what? You can take those letters and notices and you could give those to your accountant and your preparer. I have clients that call me all the time and say, hey, I got a letter, but I'm not going to open it. I don't want to. I'm going to drop it off in your mailbox today. Or, hey, I just rode past your house. I had 12 letters from the IRS. Check your mailbox. 12? What? But at least they dropped it off. I'm not mad. And I get it. Sometimes that information can be a bit overwhelming and all you see is words and enormous numbers. I get it. Give that to your accountant. We can open that and go over it for you. What I also want you to know as a taxpayer is that when it comes to the federal and state entities, you have your rights. A lot of people don't know that they have rights when it comes to these federal and state entities. They assume that because they're dealing with the federal and state entities, they don't have rights. That is not true. You have rights, 10 rights. Let's go over those rights. You have the right to be informed. You have the right to quality service. You have the right to pay no more than what's expected of you to pay. You have the right to challenge the IRS's position. You have the right to appeal an IRS decision. You have the right to finality. You have the right to confidentiality. You have the right to a fair and just tax system. And you have the right to retain representation. Talk to your accountants, people. Please ask questions. Do your research. It is okay to be nosy about you, your name, and your social. If not, you leave room for everybody else to be nosy about you. And then at the end of the year, you don't know what's going on. Why don't you know what's going on? Because you did not take that accountability. I'll take that accountability if you say, look, I got the letters. I don't want to read them. I don't even know what they're going to say. So I'm entrusting you to help me with this. You did your due diligence. You got it and you brought it to me and we opened it together. But to blatantly ignore them or misplace them or just don't do anything about it, you're basically telling these entities that, hey, catch me if you can. Basically. Don't do that. It's not that serious. So, it's important, okay? It's very, very important to be nosy about you. Because if you come to me, I'm going to be nosy about you. Now, for any taxpayer that's a 1099, basically that's self-employed, you're a cash-based business, you're making money, you're reporting money, I want you to know some things. I want you to know that, A, credits lower your taxes that you owe. Deductions lower your taxable income, and write-offs are business expenses for deductions. Don't come and say, look, I got all these receipts, I need a big refund. That's not how that go. Remember, the tax write-off is for the taxable income, whereas the tax credit is dollar for dollar, and the deduction just helps you lower your taxable liability. Keep track year-round of your receipts. If you have a problem with paper, I tell a lot of people, once a week, take all your receipts, take pictures of them, email them to yourself, then email that to your accountant. You can delete the email, then you could save the receipts. I tell people save their receipts for 10 years, if not longer. The statute of limitation is 7, but I don't take no chances. I save everything. I still got receipts from 1999. If you come back to me, I'm going to pull out that receipt. So yes, keep all your receipts year round. Put them in a nice little envelope, put them in a bin, tuck them away, right on there the year that it's for. So if you need to go back, you can always go back. You can reference that. Your bank statements that you get, keep those bank statements, because after 3 years, they're no longer kept at the banks. You need to have those for your references. Keep those. It's important. Update your preparer about what's going on with you. Because again, as I've stated, you don't lie to your doctor or your physician. You don't lie to your attorney. You don't lie to your pastor or your priest. You don't lie to your accountant. And you don't lie to God. Collectively, those 5 people can keep you out of trouble. You have to be very, very intimate with those people and tell them everything, because they're going to help you, especially when it's about your finances. Make sure your expenses are working for you, especially if you're self-employed. You want to know what's going toward tools, supplies, travel, education. Another thing, don't assume that you don't qualify because you're in conversation with someone and they say, well, oh, I didn't qualify for that, but you did, or you didn't. You need to find out the reason why. Keep in mind that everybody's tax situation is different. No one has the same unique, identical tax situation. What one person may have, that does not apply to the next person, but don't assume. That's why those conversations need to be had often, more than not often enough. Consult with your accountant before you file. Please consult, because let's say you don't consult and you file, and then you went with somebody that was much more cheaper, and then you come back because you got a letter from the IRS. Well, you forgot a W-2 or a 1099. Now you have to pay for an amended return, or you have to pay taxes on that money that was not reported. That does not make sense. You don't want to have to do that. It's not necessary. It's not. It's too much. It's literally too much to do. So, what you want to do is, again, set those appointments. Say, hey, look, some things are happening, or I'm going to be up for a promotion. What does this mean for me? Get that first check. Run that conversation by your accountant. Those letters that you got, run those letters to your accountant. Sit and ask questions. Again, if your accountant cannot answer your questions and you don't feel like that's a safe space or a safe zone, politely take your paperwork, and go somewhere else, because you are important. So is your documents. I'm so quick to tell my clients, I don't got the answer right now. Let me consult with my 2 gurus, which is Miss K and Miss Angel. If they don't know the answers, I'm getting on the phone with the IRS. Give me 3 days. That's all I need. It's 3 days. Because 2 of them days, I'm going to be on the phone. If Miss Angel and Miss K got them answers, I don't need to be on the phone. Because we've already dealt with situations as such. So we know how to handle it, okay? But talk. You have to talk. You have to be more involved with what's going on. You don't want to spend money that you don't have to spend. Another reason to talk to your accountant is if you planning on going exempt. If you done opened up a business and did not talk to your accountant. What if you didn't open up the right business? What if you don't have all the right paperwork? What if you need to open up that bank account? There's things that you want to get for your business. And sometime this year, I'm going to be doing a series on company formations, corporations, LLCs, sole proprietors, and what's the advantages and disadvantages of each and how they benefit one. A lot of people see business and they say, "Ooh, money, money, money." And that's great. That's a great outlook to have. But you have to look at things on the back end. You have to look at all of those expenses. I don't want you to go in thinking that, okay, I'm going to open my business on Monday and by next Monday, I'm going to have $10,000. Yeah, you may have that money, but let's deduct all of those expenses now that you have to deduct. Those have to be accounted for. That's important because that has to be reported to the federal and state entities. You don't want to miss a beat on that. But I'm going to be talking more about that later this year. Just as I said, the month of November, I am going to be doing that whole show on the bill that was passed. It's called the Big Beautiful Bill. I've been seeing amendments done to that bill just over the past 6 weeks. There's things that have been added and taken away. And I'm just waiting just to dig deeper into it so I can sit with you all the month of November every Saturday. And it's not just going to be me. Of course, it's going to be my gurus with me, Miss Angel and Miss K. And we're going to be talking about the financial section of that and how that affect people. We're going to be talking about the healthcare section of that and how it affects people. We're going to cover majority, all 1,600 of those pages we're going to be coming to you with. So if you have any questions, that month will be your time to have all those questions readily available. And if you don't and you're tuning in and you have questions, put your questions in the comments. We're going to respond to those questions. If not on air, we'll respond to you in private. You can also send us an email and we'll be responding to those emails. Again, we want you all to be aware of what's going on with you and your finances. We want you to know where it's going. The name of this show is Let's Talk Finances. And finances can impact everything that you do. And I remember saying and learning in school from my professor, Professor Yates, Mark Yates. I'll never forget when he walked in the classroom, he said, everything starts and ends with a transaction. And when you sit and think about it, it does. Everything has an effect on finances. Let's say you get sick and you can't go to work. Well, your finances is affected. Let's say you can't afford to pay that short-term and long-term disability. Well, your finances is affected. Let's just say you're having a bad day and you can't get in because you're having car trouble. That affects your finances. If your mental state is not in a good place, that affects your finances. If you're overwhelmed with so much that's coming at you because you can't get a hold of it, that affects your finances. These are conversations that you need to sit and have with your accountant and your preparer so they can help you. When you're going exempt, you need to know how that's going to look for you at the end of the year. If you're receiving a 1099 or if you're a cash-based business and you want to do the right thing and report that money, you need to do so because now you have PayPal, you have Chime, you have third-party transaction companies that is going to start sending out those 1099s because they no longer want to pay the taxes on your money. So guess what? They're going to submit that amount that's in your name and in your social or in your name and in your company's EIN number, and they're going to submit that to the federal and state entities. Why? Because that's money that they do not have to pay taxes on that you made. So you can't run from the federal government. You can't run. Well, you can try to run, but you can't run forever, because trust me, they're going to get you, and they're going to be tracking how you get your money so they can get their money. As my mom used to say, you can't run and hide from Uncle Sam. You just can't do it. You got to pay it. And I get it. That's the point of being in business, so you can pay your taxes. Also, when you're paying your taxes, again, nobody is matching your taxes, your Social Security and Medicare. So you got this big business. You didn't pay any estimated tax payments. You owe all this money, but now it's time for you to sit down and retire and collect money once a month. Guess what? You can't even do it because you didn't have that simple conversation and take accountability with your accountant. So now you're 85 working a job. That's not necessary. I know I got clients that want to retire by the time they're 35. I got clients that want to retire by the time they're 40. I want to retire today, but I can't. But I also have a passion for what I'm doing. And I want to make people aware that everything starts and ends with a transaction. You have to take this seriously. Get with your accountant. Know what sits on your tax return. That doesn't mean be an expert. Just know what sits on your tax return. If you're in conversation, because now those conversations are about to start happening. We are about to enter into the fourth quarter, October 1st. So from October all the way to the end of December, people are going to be talking about taxes, especially since that bill has been passed with there's no tax on overtime. Or for the service industry people, $25,000 of that tip money is not taxable. That stuff that's going to start coming up. So, and if you're unaware of how to answer those questions and how to guide those people, give them Anointed Accounting's information. Tell them, hey, I know somebody that can help you. I just heard you talking. Here's this information. They help me out. They could probably help you out. You have people that's going through stuff with the federal and state and don't know how to handle that. If you're amongst that conversation, hey, pass along the information. You never know the weight that you're taking off someone else's shoulder, okay? That's very, very, very important. So when you file your taxes and your accountant is going over your tax return with you and they say, well, this is your taxable income. This is the amount of money that reduced your taxable liability. This is your non-refundable credit. This is your tax credit. You will be aware of what they're talking about because we have talked about it right here. I've given you that information. Now, here's what I want you to take away from today's show. Before the end of the year ends, your accountant can help you plan strategically for the remainder of the year and years to come. We can catch opportunities that you can't catch. We can use our third and fourth eye to look through that lens to find costly mistakes to prevent you from paying for those costly mistakes. Remember that we're just not a form filer. We're here to help you and help you benefit from what it is that you're doing, because we want your finances to work from you. So here's my takeaways. Tax write-offs and tax deductions are often used interchangeably because they both refer to expenses that reduce your taxable income, ultimately lowering the amount of taxes that you owe. Create accounts with the federal and state entities, the IRS, and whatever state you're in, it's the Department of Revenue. Go to their website, see if you can create that account. The state of Illinois is the Department of Revenue, My Tax Illinois. Talk to your accountant more than once a year. Like, I set up an appointment with my accountant at least 2-3 times a year because I got questions. I need to know stuff. I need to know what's going on. If I go out and buy a new laptop, I'm sending my accountant email. Hey, here's the receipt. I bought a new laptop. I don't know if I'm going to use it, but here you go. So here's something we can talk about when we meet at the end of the year. So at least she's aware of what's going on, okay? It's so very, very, very important to do so. I urge you to do so, because you don't want to get left behind. You don't want to miss anything that's beneficial to you. If you have some tax returns that you have questions on, or something just doesn't look right, bring those tax returns to your tax preparer, especially if they were the ones that did not prepare it. Let them look over it to see where they can help you at. Let them see if there's a mistake. Let them see if they can find a mistake that could potentially help you and help the situation that you're in, so you don't have to be boggled down with the weight of the federal and state entities that's on you. You want to remain in compliance, okay? You want to be in compliance. You want everything to go smooth sailing. That's how I like it to go, smooth sailing. Talk to your accountant. Don't be afraid. Listen, let me tell you something. Anybody you spending your money with, don't be afraid to talk to them. Don't be afraid to talk to them. When I go to the grocery store and I get in the line, and if the clerk has an attitude, I'm putting my stuff right back in the cart and I'm going to another line, because I didn't do it to you. But I'm spending my money. So you're not going to give me that attitude, because I'm not going to give it to you. It's okay, again, to be nosy about you. Now, next week, Lord's willing, as my mom and Auntie Johnny would say, I am going to be talking to truck drivers. And again, I apologize for this show not airing correctly last week. I so apologize for that. But I made up for it today. And again, this is going to be on the YouTube channel. I'll give you all that information momentarily. But I'm going to be talking to those truck drivers out there. Some of those truck drivers are W-2 employees. They're also 1099 workers. We're going to talk about your insurance. We're going to talk about your IDOT information. We're going to talk about those 2290s that need to be filled out. We're going to talk about what you can and cannot write off, how it affects you. Because again, everything starts and ends with the transaction, and not just the truck driver. I know I've talked to all of my 1099 workers this entire month of August, and even last month I talked to my 1099 workers. It is so beneficial for you all to know what you can and cannot do and what's helpful for you. I also want to talk to you all about being in compliance. It's okay to be in compliance. It's okay. The federal and state entities understand that. They understand that you want to be in compliance. Hey, Mr. Scott, what's going on? And I want your finances to be in order. So we're going to talk about that next week. And we're going to talk about a return on your investment. Everybody wants their money to work for them. I know that hopefully, Lord's willing, when I see 50, I want to be laying in somebody's island. But in my mind, the island is in like Alaska. It's in like a cold state because I don't like the heat, right? Having me a Mai Tai, eating some catfish fillets, and just enjoying that I'm retired, but I'm also in compliance with the federal and state entities. My money is working for me. It's called residual income. I know that's right, Mr. Scott. Let it work for us. So, everyone, please, I know I've shared a lot of information with you today. Please share the information. It's free. Please share it across your pages. Like it, love it, comment. If you have any questions, please reach out to me. I am on all social media platforms under Anointed Accounting. That's ANOINTED ACCOUNTING. Our telephone number is 312-837-7219. Our website is www.ANOINTEDACCOUNTING.com. And if you have not subscribed to that YouTube page, I encourage you, please go over to YouTube, type in Anointed Accounting, and hit that subscribe button. I have shows on there from April up until now, and we have talked about so much. I can almost guarantee you any of your questions I have probably almost answered them in some of my shows. So it's so important to pass along this free information. I cannot stress that enough. It is free. Pass it on. Like, love, share the content. I want you all to enjoy this hot, lovely Saturday. Be kind to yourself and be kind to others. Love on yourself and love on others. And remember, show up. And it's okay not to be okay, but to reflect and have those memories and look through that lens that no one else can see but you. Remember, I love you guys, and I look forward to talking to you soon. Have a good one. Bye-bye.